Good morning, everyone. I'm going to get right into the stock market charts. I see some key things that are going on, and I think we're in for a pretty big drop here in the near future. So I want to point out what I'm seeing and, really talk about the key levels. I've also got a couple additional trade ideas that I want to point out in the video. So let's get going. And guys, if you're new, then leave me a thumbs up and also check out the stock market technical analysis course that I put together. It's got all the concepts that I teach in my videos. Really, it's a good course that has all the concepts broken down into about 4 to 5 hours worth of video training, going through various concepts from trendline analysis, divergence analysis, candlestick analysis, risk reward analysis, all kinds of stuff that really help you have a complete game when it comes to this trading strategy. Okay, let's get right into the triple Qs. So again, what I'm watching on the daily chart, couple things, is this blue trend line right here. I've got it marked out and I've got all the tags of support circled. I've kind of tweaked the line a little bit, just trying to find the best fit because we are in a really key area right now. And as I zoom in, you can see we're really just chopping around this line. Looks like we want to break. So I want to make sure my line's close, but at the end of the day, you can see as of right now, we're clearly below that trend line. I can't really make that trend line in any way that has us not below. So what I've got is a breakdown. Now, yes, this morning the dip buyers were there trying to buy it up, and we'll see where we close the day because this is where the bulls are really trying to fight to hold this support line, to hold this trend line. This is the line that's been intact for over a year. If this goes, you should see that initial move down, pretty swift move down, as everyone who's been long the market, since pretty much the March 2020 lows, all try to run for the exits. That's the thing. When you have an extended uptrend, everyone says the trend is your friend and until the end. And so everyone stays in and they stay long until they see a reason to get out. And usually that exit, that initial exit, is just, it's everyone trying to cram through that little door. The whole crowd, the whole herd trying to exit their trades and take profit all at once. And, not everyone gets to get out at the top. So typically what you see is a big gap down, or you'll see a pretty swift sell-off. Usually the market's not going to give you a perfect exit. It's not going to just drift lower and let everyone know, hey, it's a good time to get out because I'm going to go lower. Typically, it's going to trap a lot of the kind of the late money as that exit really starts. And that's what I see right now. So I see we've broken the trend. We're still kind of in the area. We're not, likely not going to see a big sell-off today. I think it's going to come in the form of a gap down. But that's where we're at. So the level that I'm watching right now is about 377.70, kind of right in there. And, I think if we close right where we're at about today and we're not able to really ramp it up and recover this 383 area, which is your trend line, then I think we're probably going to get that gap down on Monday. That's my read on this one. Looking at the hourly chart here, you can see a little bit of support here at about that 377.60, and then this would be the area 382.80 or 383, where if they can't ramp it up and hold that, then then I think we're likely going to get that gap down. Okay, looking at this one, IWM. This one's also kind of interesting. Now, there's not really an actionable trade here, but I've started to kind of front run this one just because I see clear signs that this has a high probability of a pretty swift move to the downside. So you'll see here, this is a daily chart, and we're looking at price action going back over a year. This is about a year's worth of price action, and it's just this big sideways trading range here in IWM, the small caps. We've just been bouncing off support and getting rejected at resistance for over a year. So the thing is that typically this to me looks like a distribution top. It looks like this thing is not able to really go higher. One reason why I think that it's likely to break down, look at this breakout right here, and this is one of the key parts of my analysis on this one. We had a breakout, and if this was about to break out and continue on for new highs, it should have done it right there, but it didn't. It was a false breakout, and it basically was a bull trap, false breakout. So this one also has big negative divergence that's been building pretty much the entire time on this on the RSI and the PPO. So each, this big sideways action has been building negative divergence for over a year. We had a false breakout. Just in general, there's nothing really bullish about this chart. So I think the way this is going to work is we're going to gap down as well, because again, all these traders, it's not going to just drift lower. Likely what it's going to do is gap down, and I've talked about that where, when you have a big level, usually you're going to, you don't give everyone just a clean exit. Usually you gap down and trap the money and create a lot of sellers. So, and panic sellers, that's, is what I think. So I think we're going to gap down, somewhere around this 203 area, 202. And then that's going to create, all these stops. Everyone who's long here who has stops kind of set right underneath this level. I've got the level at about 208.75. Those are going to start to fire off. And then, anybody who maybe hasn't shorted is going to start to pile in. It just kind of creates this rush for the exits. And I think we're going to have a swift move down. I've got some levels, to watch. You can see here at, we've got a little bit of support here at 193, but it's not much. I mean, this is a huge plateau right here, and this is a lot of trades that have taken place. So there's going to be a lot of energy which way this breaks. If it breaks to the downside, I think you're going to slice right through this minor support right here. There's just not a lot of trades here. I think you're going to go right through that. And that would probably bring us down. We've got another level. It looks like, I think it's kind of a range from about 173.92 down to about 170. We'll call it 170. We'll just call it 170. Let me move this one up right here. That's where I think your support range is. That's a pretty good support range right there. You can see all the areas, we had some support here. We got rejected. It's been resistance, basically. That's your former resistance, and then we finally kind of broke out to the upside. So I think we're probably going to trade right down to that level, to be honest, just because of all the energy that's been building in this thing. So I've started, I've taken a starting short position. I want to get ahead of this gap down if it's going to take place. That's what I like about this one. Okay, financials. So yesterday I mentioned that I took a short position in the financials, and yes, it was right before earnings, but I had a sell signal, so I took it. Looking at the hourly chart here on XLF, you can see we had this bearish rising wedge right here on XLF, and just into the end of the day, we broke that wedge right there. So that was my sell signal right there. I like that. You see the divergences, negative divergence right there on the hourly chart. See how we're just moving down on this hourly chart. As prices continue higher, the momentum was moving lower. So that told me that, okay, we're likely going to break trend. And then we got the sell signal right there towards the end of the day. So I got short. So far, it turned out to be the right play because we gapped down 1.5%. And yeah, I don't see any reason why we're going higher. This is another reason that this kind of plays into why I think we're going to actually have a pretty swift drop in the general market as a whole, because I'm seeing weakness now in tech and financials. And the financials has been kind of the strong sector, that and energy. So, if we're going to see weakness now in financials and tech's not, and there's not rotation into tech, we're just seeing kind of general weakness into tech and financials. That sets us up for just a broad-based sell-off in the market. So that's kind of what I'm seeing right now. We'll see, but I do think financials are headed down at least, to this point of support, and probably a lot lower. But 39.68, I've got a level. Looking at the daily chart here, and then we have another level right here at about 38. We'll call it 39, and then another level all the way down here at 35.35, which, could be my target. And then also if I roll out though, if I go to the weekly on the financials, this is your bull market right here coming off 2011. So you'll see support. We hit this a lot. COVID, we broke, and the Fed managed to pump it back up. We could head all the way down to that trend line right there. And if I kind of examine that, that's basically, I'd have to kind of tighten it up. But that's pretty much going to put us right about at 33 to 35 area. That is a potential target if we are going to see kind of a broad-based market correction or even a bear market. So things to look for there. I like the short. It's working so far. Moving on. Okay, Lyft selling off today. Again, I talked about shorting it right up in this area. I liked it short basically right in here. And it is, just continuing lower. I think Lyft's running down to fill this gap. There's a gap right here. And 31, about 32. So that's my target on Lyft right now is, an entrance into that gap I'll likely cover before we fill the gap. But basically down there in that 33 area is going to be my target. And from where we're at now, that's another, about a 19-20% downside. We've already, we're down 4.5% roughly today. And it looks like, we're just continuing lower. So I like that as a trade. That's working. Moving on. Someone asked me about C's if it's a short, and it's down 5% today, but it is right there at support. So I think it probably is a short, but in my opinion. But look, we have an uptrend line right here, just kind of a minor uptrend line. As I roll out, here's your major uptrend line from the March 2020 lows. So we made that clear uptrend line. We broke, and we created the secondary trend line. And you can see where we're at right now. We're just basically right at support. Let me grab the right tool here. And we're right at support there. So I think that, if this breaks impulsively, that's, definitely a short or a sell signal. I don't know if we'll get that, but we have negative divergence. That's intact right there. Those divergences are confirming because as I zoom in, see the RSI, how it's pointed down right here. So it's kind of confirming that divergence. And then the PPO has already had a crossover and pointed down. So we've got negative divergence. We're right at support though. So I think if it's going to break, it's probably going to gap down with the market. And then we're going to see that, you have to, if you want to step, if you want to maybe try to get ahead of that, there's always the potential for a bounce here at support though. Okay. AVGO, just continuing to sell off. So I don't see any reason why this is not going to continue the downtrend. We got short up here at resistance. All right. We fell down to our first level of support, which I had marked out well in advance. When I entered the trade, I had the first level of support marked out about 607, 606.90. We got a little bounce right here, and now we're just breaking through that and heading lower. We filled the gap, so there's kind of a little bit of support right here. So we're probably going to just hold here today and then move lower if the market continues to move lower, which I am anticipating. Next level of support is right down here, 546.73. So if the market gaps down, I think we'll probably sell off and get right down there on that first move. Okay, so I like that for continuation to the downside. Moving on. Qualcomm, they're just kind of rallying it. This one's just kind of trading within this big range right here. So I think it's going to be very similar to the rest of the market where if it's going to move lower, it's probably going to gap lower and likely going to gap below here, about 169.80. We'll probably gap down here and then just start to sell off. All right, so that's how I believe that one will play out, but we'll have to wait and see. I still like it short, clean negative divergence. Look at that, just building and building and building. And given the rest of the market setup, I think it's definitely a good short. You just have to get it. On this one, we don't have a clean sell signal because all we have is negative divergence and we're just trading within this range. But, I'm going to get ahead of it, I think, and take a chance. So a little higher risk because I don't have that sell signal. But I've got some signs in the other markets that I think are going to play out and give this that gap down. So that's what I got on that. Do with that what you will. If you're still in GNRC, it's now pretty obvious that GNRC is heading down to the next level of support, and I've got that circled as the probably the final target if you're still short on that one. So we did hit this level of support, 339.37, and now we're moving down to the next level, 287.17. Pretty good support there. I've got that marked out. So that to me is likely the final target on that one. And, there's no sense in getting greedy. From the initial sell signal, which, I called right back here on November 3rd, sorry. It's moved down 36%, and maybe when it's all said and done, about a 40% drop. So I think that one's about running out of steam. Moving on. Ford. I like Ford short here, and I noticed that they're starting to talk about Ford all over CNBC, so that tells me that the retail trade's all over it. And, not always, but for the most part, I do like to fade the retail trade. Retail typically comes late to the party, and so usually it's a sign that the move's about finished. So Ford has been rallying off the March 2020 lows. It's just been in a pretty good rally. I've got this trend line marked out now. It did break trend back here in August, and then it recovered it. So, false breakdown basically. We could have that again, but recently we've rallied right up to resistance. And one thing that, when we recovered this trend line right here, we put in a new high in the momentum. So it kind of burned through the divergence, any negative divergence that existed. And actually, as I roll out, I do notice that this thing, it had a little bit of negative divergence right here. This was a divergent high, and it did play out for a little bit of a correction. It doesn't look like much, but that's because I'm using log scaling. But from high to low, that was about a 17% drop. So clearly that played out. And then it rallied again and made a new high. So momentum kept building. And only recently, and even there on this rally, we made a new high in momentum. Now we have a new high in price up here. And we have, we're starting to, have that negative divergence. I've got it marked out. So that's telling me that, okay, this thing's about done. And we rallied, as I roll out, here's your price channel. We rallied right into resistance. And you can see we kind of popped it yesterday, just kind of popped above there and failed. And we're just getting rejected right in this area. I think this is likely due for a pullback. Minimum target on this would be the bottom of the channel. And that would be from where we're at now, about a 15% drop. But I think it's probable that, and this is where the dip buyers will be at. They'll be buying it down here, trying to hold this channel. But I think it's likely if you're going to see that big market correction that we could just sell right down, rest for a day or, maybe even a week and then break. All right. But the way to trade it is probably trade it down to the channel. If you're short, you could cover down there. And then the next sell signal or opportunity to get short again would be on a break of the channel to the downside. All right, that kind of limits your risk. You'd lock in profit on a move down there, and then, you can reshort it, probably at a lower price, of course, but you'll be locking in profit and then taking the short on the next break. And we'll wrap up with GameStop, GME. Now, I know a lot of people are completely afraid to short this thing because, the shorts obviously got burned in the past. But again, that was when you had really high short interest, and this thing, it was really bombed out. You had really high short interest, which makes no sense. You don't want to be piling into a short after something sold off. If you look at GameStop here, this thing from the highs here in 2013 had sold off 95%, and then so down here at 95%, you had super high short interest. That was just shorts being greedy and really complacent. Because it had continued to move lower. So I think they thought it was going bankrupt, which I think it probably will in the future. But it was just a target for a short squeeze. And all the liquidity that the Fed pumped into the market, giving retail all kinds of buying power, they all huddled up in the Reddit groups. And then with that money, those stimulus checks all bought covered call or out of the money calls. And they just created this massive short squeeze. It was pretty interesting, really. But again, my strategy, I'm never going to be short something after it's been bombed out by 95% or so. I'm likely, you're going to cover your, you take your profit as you go. And just like I don't usually want to be long after something's rallied a ton, I usually want to look for that opposite trade. All right, so GameStop has this level of support. And, if you want to give it the benefit of the doubt, I would say you could just say it's right there at 119.87. So you can see we've got one reaction here, one, and then a couple higher. A lot more reactions we've had at that 130.150, and we're clearly drifting lower, and the selling's starting to increase. So I think this one's done. That's my opinion, of course. Everything on this channel is just my opinion, guys. I'm not a financial advisor, so just pointing out trade ideas from what I see in the charts. And the we're selling off. We're down 7% today. And as far as I can see, we're like, this is just going to accelerate as all these traders, all these kind of this is all retail for the most part. The hedge funds, they got in during this price action. They're out of there for the most part. If hedge funds are in this, they're probably short. And you've got all this money that's just, thinking this thing's going to continue. What happens is late retail people, they see this kind of a move. So they get in at the high thinking, okay, I'm now going to get this kind of a move now. Well, no, the early people get this move. So I think we're early on the short trade, and I think we're going to get this kind of a move, and it'll be pretty quick, down to 45.25. The buyer, you'll probably get a reflexive bounce there, maybe even up to the top, back up to the top, but ultimately, lower. My target right now is just that 45 area. There are, several targets on the way, down there, but I don't want to get greedy. So ultimately what I'm looking for is a drop down to about 45.95 from where we're at. That's a 60% drop. So we're, I'm looking for a little bit more than this thing to get cut in half, a little bit more than half. And yeah, that's what I'm looking for on that one. I think we're just getting started. So if we get a gap down in the general markets, this thing's going to get sold even harder, because this is one of those momentum names. All those crazy growth momentum names that are just propped up on money pumping basically and really nothing, they all just flush out, and usually a lot more than just the general market. This is going to sell off a lot quicker and a lot more than something like Apple would, that actually has earnings and is a strong company. So keep that in mind. And I'm going to wrap up here, guys. Leave me a thumbs up on your way out. I hope you find some value, and we'll see how next week plays out. Thanks. Bye.